Hello and welcome to BTI's Market Outlook and Client Service Review for 2016. We appreciate you taking the time to join us. It is noon here in Boston, or just a few minutes after. And for those of you interested, it's a little chilly today. It's in the upper 20s. We have just over 1,200 people joining us today, and we still have a broad number of people, it looks like, that are still logging on and will be joining us very shortly. We have a lot of new things to share with you today, and we look forward to the discussion that we're about to have. As we move into the discussion today, what I'd like to do is first introduce myself. This is Michael Reinowesser. I am the president and founder of the BTI Consulting Group, and I have the easier job today here at BTI of presenting and discussing some of our new research and findings that we have to help you pursue new business and grow and improve your client service. Working with me, who you can't see, is Jennifer Patron-Dizo. Jennifer will be working on the Q&A. If you look on your screens, you have a chat function in the upper right. Anytime you have a question or a thought, please feel free to use that chat function. Jen will be feverishly working to answer any and all questions as quickly and reasonably as we possibly can. We're going to be talking about a number of key topics today. We're going to talk about the marketplace and what's happening in the market. We're going to talk about what's happening with client service and why it's changed the way that it has. And then we'll move into a discussion of law firms and how they're doing on the BTI Client Service A team, and overall how clients are thinking about client service and how that will impact the new opportunities that we're going to talk about today. So you're probably looking at the screen, and maybe some of you recognize this and have figured out what this is, but for those of you that want the details, this is the first ever World Championship of musical chairs held in Amesbury, Massachusetts, which is about 30 miles north of Boston, Massachusetts. And we thought this was a particularly apropos picture to characterize today's marketplace, because what we found and what we're going to discuss is that for the first time in a very long time, we see new, high-margin, complex work coming back into the marketplace in a measurable way. But this work is coming back in a way where it's not necessarily obvious where it is, and it's not raising its hand saying, here I am. We have to go find it, and if we're out looking for it when the music stops and somebody else finds this work, we're going to be without a chair, we're not going to be playing, and the game continues to go on until there are just a few people left that are the ultimate winners at this game of musical chairs or musical opportunities. Trying to put that in context, what I'd like to do is look at the marketplace and talk about what has changed and where we've been. As most of you know, BTI has been tracking the legal marketplace and legal spending for over 15 years now, and that history tells us a story. It tells us not only where we've been, but also can inform us of where we're headed and what that means. Each of these individual bars that you're looking at from 2001 through 2015 represents the spending at an individual large company. So if you were to walk into a large organization with about $1 billion in revenue or more, U.S.-centric, you would find an average spending in 2015 of about $19.6 million per company. Now, we're going to use the average because we're trying to show what's happening in the overall marketplace. We are keenly aware that there are companies that spend $450 and $500 million on outside counsel spending, and there are companies that spend less than this, certainly than the 19.6. Every trend that we're going to talk about, if anything, the larger the company, the more pronounced and the more acute this trend is. That is, it will be amplified at the larger organizations, yet it will still be present in the smaller organizations represented by this. So we're using this as an indicator of what is going on in the overall marketplace. So as we all know, if we go back through history, the period of 2009 through 2014 really has been, we've characterized it as a predator's paradise. This is an environment where the budgets weren't changing very much. The clients were focused on how they clamped down on the individual categories and the individual matters that they were working on. And they weren't seeing a lot of change except how to incrementally get more work out of the system. And you weren't seeing too many different types of matter flowing into the budgets. Back in 2001 to 2008 was almost the opposite of that. There were new matters, there was new money, there was new spending, and as we all know, that was a very good time to be a law firm. Now, what's happened is, if you look at the 2001 through 2008 time frame, which has the light green outside counsel spending, and then if you look at 2009, 2004 to 2014, you can see that we have two distinct phases, if you will, two distinct patterns of spending, each requiring different strategies. We're showing our research, our interviews with clients and the people that make the decisions about legal budgets are saying that 2015 is finally going to be different. It is an opportunity that we really haven't seen in quite some time. Now, I know some of the questions we're already getting are, Michael, how could there possibly be opportunity when outside counsel spending and total spending actually went down a little bit? And this is going to be the key to understanding where the opportunity is going to be in 2016 and likely moving ahead past 2016. So if you look at 2016, even though there's an average of $19.6 million in spending, what is so vastly different about 2014 from 2015 is that we saw roughly 27 or so percent, somewhere between 25 and 30% of the outside counsel spending going to new, complex, high-risk matters and cases. So all of these have kind of come into the market recently. They are relatively new matters. Sometimes they're still being evaluated for how much risk is being associated with it. Most have already had outside counsel hired to help with this matter. And this has had a profound change on, first, how corporate counsel are thinking about their budgets and their law firms. Because one of the big things that happened in 2015, for the first time in 5 years, we have seen corporate counsel really stop spending internally and start to send money back out to law firms, back to outside counsel. Now, that correlates directly with this increase in the new high-risk matters, because corporate counsel are saying they don't have the staff and the bandwidth and the broad range of skills to deal with these new matters quickly. So this spending is going out to law firms. So even though the market is flat, there's at least 25 to 30% of the client's budget that is not only available, but this is the kind of work that we have all been waiting for and set ourselves up for. The question we're always getting at BTI is, how do we get the high margin work? How do we get the complex work? Well, this is the return of that very, attractive work coming back into the market. Now, it's hidden in the decline of overall spending, which means that we, as we look out into the marketplace, have to be very astute, be very engaged with our clients to be able to spot these opportunities, because they're not the kinds of things that are obvious, and they're not the kinds of things that clients are necessarily announcing that they have, because some of them are so high risk, they're trying to keep more of their arms around them. So this will define one of the themes and approaches, in that we now have a different kind of marketplace that we're dealing with. If we're not focused on where the opportunity is, then the chances of finding that opportunity go down fairly dramatically. So one of the things we'll talk about throughout our session today is exactly how we spot these opportunities and how to take advantage of them and what they look like. So hopefully this is a ray of optimism and sunshine after years of very, very difficult and still a difficult marketplace, but it just got a little bit easier to pursue. Now, at the same time, we all know that clients work with multiple law firms, and in 2014, they actually had cut their law firm rosters to tie almost the lowest ranks that they've had in 15 years. The only other year that was a little bit lower was 2009, and we'll call that roughly equal. And what has happened is, as you can see, clients, corporate counsel, have increased the number of law firms they work with, from 36 law firms up to 42. They have added 6 new law firms just as this new work is coming on board. So from the period of 2012 to 2014, we went from 54 law firms down to 46, down to 36. So if you were able to protect your position during that time frame, even though spending wasn't growing, you had fewer competitors to share it with. Now, there's new opportunity, there's attractive opportunity, but all of a sudden we have 6 more competitors than we had last year. And this is going to be one of the challenges that law firms have. Do you know who these 6 firms are? Do you know what their client service performance levels, their business development skills, their level of aggressiveness? Because if clients are bringing in new firms, generally there is only one reason, and that is because they're not getting everything they want from the existing firms that they have. So when we ask corporate counsel if they recommend or who they recommend, in an unprompted manner, we found that only 33% of clients are now recommending their primary law firm first. As you know, when we've discussed in prior years, we call this relationship when you are both the primary law firm and the first recommended firm, that is a state of clientopia. It means that you have the absolute best relationship that you could possibly have with your client. So the good news is, if you're one of these law firms that has clients in the 33%, that is good news for you, because you couldn't be better positioned to get this new attractive work coming into the marketplace. However, the chances are only 1 in 3 for the average law firm that you will be peered or set up to be able to access this new work without necessarily going out to RFP. Now, we found over the years that there is a definite correlation between the number of law firms clients use, which is the blue line on your screen. You could see the increase right here, and look at the decrease in client service levels and client recommendation rates in the clientopia rate, from 40% all the way down to 33%. So at the same time we see a drop in the recommendation rate of primary firms, normally the primary firm would have the pole position for the new work, but instead, because clients aren't getting what it is they want, they're looking to new firms and trying them out and making it more difficult for the law firms that were there. So the challenge is, how do we make sure that we are in the 33% and not in the other 2/3, which is not teed up to get the new business? Now, part of the reason this situation exists, and I think this is a very important point, is that it doesn't necessarily mean that law firms are doing a bad job. It doesn't mean that even that their client service has necessarily declined, although in some cases it has. What we have found is the phenomena of law firms being the same is really the kind of typical position in the marketplace. When we aggregated all our client feedback from the last 18 months, and what we did is we compared how corporate counsel ranked our client, our law firm clients' client service versus the client service of the firm that they view as the most competitive and who does the best job for them amongst those 42 law firms. 20% said that the law firm that we were talking about was better, clearly, head and shoulders better than every other law firm they worked with. 57% said, well, my primary providers, they're all good, but they're all pretty much the same. There's nobody that has that standout performance that makes them head and shoulders than everybody else. And then 22% said, well, frankly, a competitor is better. Now, this may not be the information we want to hear, but in terms of client feedback and evaluating your performance, this information is invaluable, because most client feedback will ask the question, how are we doing? But if you're not adding the relative component, meaning that how are we doing plus how are we doing against another firm, we may unfortunately never know that even though we're really good, we're up against 4 other firms that are pretty good. How do we get to be the only firm? Now, being in that 20% gets you that work at a premium rate, and clients will rarely put the work out to bid. They will come to you. It doesn't mean they won't negotiate with you. It doesn't mean they won't try to get a better rate, but it doesn't go out to bid. And of course, this is the most attractive way to get business, whether we're in the slow market environment or fast market environment. But, nothing beats being awarded the work on a sole source basis. If you're performing less than a competitor, then you're simply not going to get the work. You may be asked to bid ultimately, but this is when we often hear that, the price was too high, the decision was taken out of my hands. Clients have many, many, many reasons not to hire, but anybody that is below is just not going to get the work. The majority, the 58% or so that are performing the same as the other primary providers, well, they're going to get the RFPs, they're going to get the rate pressure. And this is, of course, we spend a lot of our time as law firm marketers and in law firms preparing these RFPs. They seem to only take up more time. But the best way to combat an RFP is to find ways to stand out and get yourself in that 20% that just stand head and shoulders above all those primary law firms. It's kind of a double win, because you save the money, the time, the energy of putting together the RFP, and you're going to get a higher rate for the work that you're going to win, because clients always pay premiums for client service and for those firms where they don't have to go through the process of going through a negotiation and a bidding process. So this is going to be one of the determinants in how law firms get this new business. Now, let's talk about why client service levels have dropped and are dropping, because there's some really, new and important trends that are driving, some of which are counterintuitive, this drop in client service. First, there's about 25 to 30% of general counsel that are what we're calling new generation. That is, they have replaced typically a long time, if not a very senior, very experienced general counsel. These general counsel maybe have a little bit less experience. They probably have worked at a law firm as a partner or perhaps even a leadership partner. And given that there's, somewhere between 20-25% of these now in the marketplace, they are really starting to influence how law firms are measured, how law firms will be expected to behave, and they don't bring the same expectations that their predecessors did. They want metrics. They did not grow up in an era where budgets became kind of a nice thing and a novelty to important. These GCs just only know that, we need to have budgets and we need to have metrics and we need to have ongoing updates. And they being the general counsel, the new generation general counsel, need to share this information on a timely basis with their superiors, usually the CEO, perhaps even the board. So these expectations are really running ahead of many law firms that are either slow to adapt, are not adapting, and those law firms that are embracing these new demands are doing extraordinarily well and standing out from the crowd. So this generational gap, there's just so much discussion about, intergenerational marketing and new generation and how do we deal with our associates, but we have the same issue going on with our clients. There are now generational differences, and these are going to start to impact and define client service. Number 2, efficiency is eating into client service. We've heard corporate counsel tell us that ever since their law firms adopted project management and other tools, some have done it very well and it's really worked, but we're hearing more and more about corporate counsel that say the project management tools that they're using, the efficiency tools they're using are taking away flexibility. They're taking away the personal aspects of communication. And in some cases, the clients plain don't like the way the new projects and the new processes are rolling out. We found this year that clients told us that 23% of law firms are now less skilled and less equipped to handle unexpected changes in their ongoing matters. And to them, that flies in the face of why you would have long-term legal project management, so that you can better respond to these unexpected changes. So this is a little bit counterintuitive. In some cases, clients have told us that it's a little bit unexpected, but nevertheless, it is there. So when we're developing our efficiency programs, getting the voice of the client in that efficiency program is often the difference between, yes, this is client-centric and client-friendly, versus, no, you're becoming inflexible, and it's actually harder for you, in my opinion, as a client to deal with change. Lacking business implication. This is directly related to the surge in the new complex business. Clients are insistent that the most important factor after client service in awarding the work for the very complex and bet-the-company work is the ability to understand their business and the business risk. Because what corporate counsel say is that if I have a really risky matter, ultimately it's the business risk that makes it bet the company. And if you can't articulate the business risk in some way, not the whole thing, but in some way, if you can angle into that, you have just helped your client define the risk in a way that others can't define. So if you just define the legal risk, you put yourself in the category of those law firms that certainly are capable, competent, highly skilled, and can do the work, but they can't go that extra step that makes you stand out from everybody else. So all of a sudden, your lack of ability to articulate the business implications is hurting client service just when that is becoming more important because it is attached to all the new work that's coming into the marketplace. Successful client service initiatives. How on earth could successful client service initiatives possibly hurt client service? Well, there's a group of law firms out there that have adopted, implemented, are funding and investing year after year in improving their client service, and they're having great success. As they are having great success year after year after year, it is making other law firms look like they are standing still, even though they may not be, on a relative basis. So we get back to this idea of making sure we measure the relative performance as well as the absolute performance, of ensuring that there isn't someone out there in our client base that is really driving and setting the benchmark for what client service ought to look like. And when you look at the Client Service A team and the BTI Client Service 30, we'll talk about some of the things those firms are doing. But there's enough of these firms now that it really is setting a standard and making everyone else look like they're not doing as well. The other side of that is what I call the sputtering client service initiatives. And we see many more of these than we do the successful client service initiatives. The sputtering initiative is year one, it gets a lot of attention. Year two, it gets some attention. Year three, it gets a little bit of attention. We find these programs tend not to have metrics. They tend not to be monitored closely. And all of a sudden, you have a little bit of a surge at a law firm in 1 year, and then you have less enthusiasm. Clients see this as a client service backstep. When you take one step forward and you don't continue, it's like taking 3 steps back. So these are the things that we're hearing about from the client community. And then we have our other acts of omission. So, billing surprises, not playing offense, which means that clients are asking us for things before we offer them to clients. That is, we're not playing offense and trying to stay ahead. And, when clients chase law firms for, status updates, budget information, billing, those kinds of things, which have been around for a while. But the first 5 are really relatively new, and we think are going to have a lot of impact as we move forward. Now, again, this would be important in any market, no matter what the conditions, because client service sits at the heart of the relationship with clients. But this year it's especially important because this will be your access. This will be your ability to get to the new business. And this is BTI's business development roadmap, which outlines the different practices by market opportunity and market position. Each circle represents the spending going to each practice area, and the placement of the circle is really based on 2 factors. First, we plotted according to the horizontal line, the growth, which is about 1.2%. So any of the circles that are above that horizontal line are growing faster than the overall market. They're getting new incremental dollars, so there's new opportunity to go and get business that wasn't there before. Nobody likely has that business. If you're below that horizontal line, that means that there are no new incremental dollars, and in fact, there may be shrinking dollars. And the only way to get that business is by taking it from somebody else, because somebody's already performing that type of work in that client. The other aspect is looking at this vertical line. Anything to the right is receiving higher rates. Anything to the left is under more rate pressure. So you immediately have 4 quadrants. In the upper right, we have what we call the priority practices. Those practices are receiving new incremental dollars and also receiving generally higher rates. So those would be the places where we can go and carve out new business and be more aggressive with our strategies in terms of raw business development. In the lower right, we have the opportunistic practices. Those are not necessarily getting new dollars, but also represent high rate work, and there'll be a little bit more competition for that work, so we'll have to hone our skills and do some protection of our turf while we're performing that work. In the upper left, we have what we call the tactical practices, which are under a little bit more rate pressure, but still growing and providing opportunity. And then in the lower left, we have the cornerstones, which are essential practices, but under some price pressure and not necessarily growing, usually because it has lost some priority status in the terms of what clients are trying to accomplish. For the first time in several years, bet the company litigation has gone from decline to increase. It had been on the decline, now it's increasing again. Clients are seeing a broader array of threats, whether they be from regulatory initiatives, investigations, whether they be tied to global transactions, whether they be tied to supply chain and global supply chain issues. But for the first time, we have seen growth in this most coveted segment of the overall marketplace. As we talked about before, the number one factor in getting this work is understanding the client's business. So this provides a real opportunity, and if you are engaged and in dialogue with your client, there is a high likelihood that you are in a position to start talking to your client about these risks. If they don't have bet the company work, we expect to see an increase in this bet the company work. M&A is providing a great umbrella for a number of law firms in the overall market. It is really hitting on all cylinders because we think that we are at the beginning of what is going to be a wave of global large transactions, and that of course spins off a tremendous amount of work, a tremendous amount of opportunity, and the deals are just going to get bigger and more complex. So that's kind of the large end of the market. That's also creating a market for the spin-offs and restructurings that some of these global transactions are required to do for antitrust reasons. And then it's also driving the market for middle market M&A, because one of the factors driving the global M&A is that companies are so large they're finding it hard to grow organically. One of the ways, of course, you overcome that is to merge with another organization. But at the same time, another way to overcome that is to acquire products and technologies and product lines and channels to the marketplace and permits and intellectual property that come with middle market companies. So we have seen both the middle market, the global segment of the M&A market really be robust. And if anything, this number is understated because at least 50% of the funding for mergers and acquisitions comes from the business units. So we're optimistic about M&A. Class actions for the first time in about 4 years is showing growth as we see more and more plaintiffs take advantage of what they see in interpretations in product labeling and in consumer fraud. Of course, data breach is a key part of that, and that is growing, and clients are much more concerned about class actions and spending more money on class actions than they've been in probably 5 years. Cybersecurity and data privacy continues to just outpace any other practice in terms of growth. Here, the demand clearly is well in excess of supply. Clients will tell you that there is a shortage of experienced and seasoned attorneys who can really inform them from an experienced viewpoint, and are paying premiums for those who can bring that viewpoint to them as they look to deal with these issues. There is virtually no company in the United States that is not concerned about cybersecurity and data privacy. Now, there's also some hidden opportunity in litigation, regulatory, and securities and finance, although, you know, if you look at litigation, one of the areas that's really been robust in terms of pricing and growth is product liability, which is kind of becoming a cousin to class actions. At least 50% of the regulatory work is growing and providing opportunity, and then there's still some securities and finance, and watch what happens to the junk bond market as it appears to deteriorate. There'll probably be a lot of spin-off work related to restructurings and reissuance of different types of bonds to replace the ones that they have. So all these are going to be relatively high rate and opportunities, but they're not coming into the market new. We're going to have to go out and find these in our individual clients. So how do we do that? Well, looking at it from the other side, what we did, and this is from some forthcoming research we're going to be releasing later in the year, which is how clients hire and select law firms. And what we did is we asked clients to tell us on a scale of 1 to 10 how influential, how important each of these factors are in the hiring process. So, number 1, on a scale of 1 to 10 at 9.2 is superior client service. So, as we look at it, no matter how we try, we can't escape the fact that if we want to get hired, we have to be delivering superior client service. Not only is superior client service number 1, but look how much of a lead it has over number 2 and then all the others. It dominates. It is the defining factor in getting hired for new work. Now, the second biggest factor is peer recommendations. And a peer recommendation, just to be clear, is corporate counsel talking to other corporate counsel. And they have many formal and informal networks where they communicate, where they discuss the things that they're doing, and they actively and keenly listen for which law firms get recommended in an unprompted manner. Now, if you think about that, what that means is, first, 54% of the decision makers recommend a law firm because of their superior client service. So their superior client service coming back into this again and driving the decision. So I won't bring that up again, I promise, for another couple of minutes. But after we talk about the peer recommendations, the last statistic that I think is important is that 60% of all general counsel, of all corporate counsel, not just general counsel, will hire the law firm on a basis of a single unprompted recommendation from a peer. So think about that. All it takes is one to get hired. But that one is very, very, very hard to earn because you've got to get your client to stand up and stick their neck out for you. Now, this is a little bit different than saying how likely are they to recommend you, because here they actually are recommending you. And that is a measure that will be a leading indicator of new business, and as you can see, will land you new business. Now, if we're not in a position to deliver superior client service or get peer referred or recommended on the basis of client service, the next two criteria are key. And you notice that they're similar both in score and scope. The first one is quoted expert on industry trends and a presenter at a client industry event. And what we mean by client industry event, it's not an ABA event, it's not a law firm event. It would be something like an oil and gas conference or a high-tech conference or a biotech conference. And what clients are saying is, okay, so if I don't know a law firm where I can get my superior client service, or I don't have a recommendation from a peer, the first thing I want to go for is their industry knowledge, their industry insight. What's the best way to do that? Well, I could certainly go to the website, but of course, every website has something about industry. So they want to go more third party. They want something that is vetted. So they're going to look for those attorneys that have been quoted somewhere by a third party about their industry and about industry trends. That would be one of the most reliable mechanisms that they could have, tied with the ability to present. Because what clients say is that if I can actually see someone present and talk about the industry, I can make my own assessment of how much conviction they have, how much insight they really have, how much confidence I have in their insight, which I can't really do in an article. So the point really to be taken away from this is that client service is number 1 and 2, and then industry insight, which remember is tied to the high rate complex work, are the second 2 most influential factors. Now, if I don't bring those things, all of a sudden, I am not a brand safe firm. And this is where clients will tell you they hire on reputation. Because what they're saying is, look, if don't know I'm going to get superior client service, and I don't know if I'm going to get industry insight, then I'm going to go with the best general reputation. And if you want to understand who those firms are, many of you are familiar with the BTI Brand Elite report we put out every April, and those firms are the likely firms to be getting the work that is out there, because that is what comes next in the selection criteria. Hopefully, through some of the recommendations today and some of the things that you're already doing, that won't happen. But this is the process and the thought process that clients go through as they are trying to figure out who they want to work with. Ideally, the superior client service will be coming from a firm they are working with, and they're in that 20% that we talked about earlier that are better than all their peers in those 42 other law firms serving a particular client. Now, the superior relationship is driven by these 17 activities. And we test them every year to make sure that these are the right activities. They have changed twice since 2001 when we introduced them to the legal community. One of the other big changes that we have made from prior years is I am the proud author of a book called Clientelligence, How Superior Client Relationships Fuel Growth and Profits, and discuss these 17 activities in great detail and give a lot of examples. But for today's purposes, I think there's a couple of things that we need to understand. First is we ask clients to rank and quantify how important each one of these 17 activities is. That is on the bottom axis. The more important activities are over to the right, lower importance over to the left. This line running up and down the chart is the average of all 17 activities. So most of our attention ends up on this right-hand side with the activities we know are more important. But as we were doing the research, clients would tell us importance is only half the story. This particular activity we're discussing may or may not influence the relationship in client service. So we went back out and we found out how much each of these activities actually contributes or differentiates a law firm in terms of client service, separating you from another law firm, and delivering a superior performance. Those activities that are above this horizontal line, that is going this way, are those activities that have more influence. The activities below the horizontal line have less influence. So the most important activity on here is legal skills, as it has been in prior years, and every year we've done it, and that makes perfect sense. However, you'll notice that it is well below the horizontal line, meaning that it is a requirement, it is essential, but having good legal skills does not separate you from the 42 other law firms that clients are using. The second most important activity on here is commitment to help. It's actually more important than quality. That is the activity that is most influential in client service, in separating you from those 42 other law firms, and is the highly personal judgment every client makes that says, are you here to bill hours or are you here to help me? And unfortunately, law firms send a lot of unintended messages that say, you know, I may not be all that committed, but I'd really like to do the work. And clients are looking for those that have this unfettered commitment, that you're going to step out in front of them, that you might even take the bullet for them. Providing value for the dollar, client focus, and understanding the client's business, you can see is at the top of the things that drive the superior relationship. The most differentiating factor in the client relationship is this idea of understanding the client's business. Now, this is the third time we've seen it. Clients are bringing more high margin work in. They're looking for superior client service and understanding of the client's business, and it's also the biggest differentiator in what we call relationship bliss, the four most important activities driving the superior client relationship. Now, every year we go out and we ask about 330 corporate counsel which law firm, with no prompting, no suggestions, is best at each of these 17 activities. They tell us, most of them identify just one firm, and we apply the numerical scores based on what clients tell us the importance and the weighting factor of each of the activities is. We tally all that up, And this year we heard about 311 law firms, but 30 of those firms perform 5 to 15 times better than everybody else. Not once or twice, 5 to 15 times. And this year was a year of very big change. We had 11 firms, depending if you want to be an optimist or a pessimist, 11 firms joined the BTI Client Service 30, which means that 11 firms dropped off. We still are in a position where Jones Day, Morgan Lewis, Sidley Austin have been on BTI Client Service 30 for 15 years in a row. Skadden is number 1 for the 3rd year in a row. Let's all congratulate Holland and Hart and Scopolitis. This is their first appearance on the BTI Client Service 30. Since not everybody is familiar with Scopolitis, they are a firm based in Indianapolis which specializes in the transportation industry, which shows you the importance of industry understanding. Now, as you look at this, as in prior years, you can see there are large global firms, there are high-rate firms, there are firms with lower rates, there are mid-sized firms, there's our smaller firm, there's regional firms. The only firms that can't get on the BTI Client Service 30 are those that don't deliver superior client service. There is no structural barrier to not having superior client service. So this was a big year of change. It was new firms came on, and those firms had typically been moving up the ranks. Hogan Lovells at number 3 is registering its best performance ever in 15 years, having moved up about 20 or 22 different spots. So you can see some of the firms have learned to really embrace and improve this, and we're not going to talk about the firms that dropped off who, are not keeping up, but, I wouldn't count them out either because they're trying to reassess and improve as well. What's happening at the BTI Client Service 30? They're embracing the new generation GC demands that we talked about. Clients are getting a highly customized experience. When they get, customized, when they get the continuing legal education, it is customized to that particular client. It's not a generic webinar from everybody else. They're typically 3 of the 4 of the top on the BTI Client Service 30 are best in class in understanding their client's business, so that is playing a big role in driving the performance of the BTI Client Service 30. They have accountability in their firms. You could go to each of these top performers and you could name the partner that is accountable for the performance of the client service of the firm, period. There's no ambiguity. They're not responsible for overseeing it or monitoring it. They are responsible for making it better. And finally, their client service is enduring. If you look at the 11 firms which did not drop off, the remainder, which is about 20 or so, have all been on the BTI Client Service 30 except for 2 for at least 9 years or more. So there is a culture of client service and high performance that is developing that is really setting the standard for many other law firms. So what do we do? How do we improve? First, given the nature of the opportunities, we're recommending that every firm, almost of every size, take its major clients and treat them as a market of one. If you need to, take budget from some other area like webinars and events, and look at anywhere from your top 25 to top 60 clients. We call this a market of one strategy, and start to figure out how you can engage with your client to identify these new opportunities. Is it client feedback? Is it a risk assessment? Is it a planning session with your client? Is it a set of guidelines and checklists? But all this engagement that is customized to your client, that is not generic, will provide you inroads to these new opportunities or point you to the risks that would drive the new high-rate opportunities that we're talking about. Number 2, develop and deliver custom multi-practice CLEs for your top clients with multiple partners presenting. And this gets back to the highly customized experience, the individualist, the specific specific issues your clients face, and this is one of the most effective tools to cross-sell. Because if you're standing in front of your client, educating your client and their staff, maybe even their business people if you're lucky, with different partners with different skills, they are going to see the value in working with multiple partners from your firm. If you don't present multiple partners, then you lose the opportunity to show the breadth of your firm. Number 3, large-scale use of independent client feedback. Dozens to hundreds of interviews by a third party and act on it. We're seeing more and more of this. It's growing. It's making an impact. And the real issue here is that if you're doing client feedback within your firm with leadership partners, we encourage you to keep doing it, keep building on it. But what you gain through the independent piece is the ability to get the relative performance as well as the absolute performance. Very few clients will tell you that you're not doing quite as well or you're just the same as other law firms, because if you're meeting with them, it makes them uncomfortable. It makes them have to deal with issues that they really don't want to spend their time on. They'd rather talk about other kinds of things. Now, there's been some wide definition and discussion of what client feedback looks like. In our minds, some of the work we've done in the last 12 to 18 months, we've done, we had clients where we interviewed 2 of their clients, went all the way up to 242 in one wave, 73 interviews at 45 clients. We interviewed, 39 individuals at one very large client, top 10 clients for a single partner, online surveys of hundreds of clients or combining that with telephone interviews, and of course in-person interviews. What makes these different from what most law firms are doing are 2 things. One is getting at the relative performance and having metrics that are statistically tested, and really the second is that few law firms can get this breadth of feedback in a relatively short period of time. Most of these assignments we completed in roughly 2 to 4 months. Some cases we have clients where we're doing it 12 months out of a year on a rolling basis, which is also equally effective. But the point is that between losing the ability to measure yourself against those 42 other firms and not getting the scale to drive performance across the firm and develop metrics that everybody can be assessed against, you're losing some of the power of client feedback. Then, engage with clients in triage. Sit down with clients as matters are coming in and assess the risk. Is this one of those high-risk matters? Is it a high-risk matter in sheep's clothing or routine clothing? What does it look like? Because these matters are getting a little bit less cookie-cutter, a little bit more unique, and require more thought. It's interesting because I know 3 law firms that are doing this very successfully. One is doing it as a business development cost and not charging the client. They go in once a month and meet with the client and are available and talk by phone when they're not meeting in person about new matters that come up. Another firm is doing the same kind of thing, but they included it as part of an alternative fee. The third one is charging by the hour for it. All 3 are getting swaths of business they never believed that they would ever have, because they are now sitting at the front of the table. They are the first ones to see the work as it comes in the door, and they can help assess at the most strategic points of the matter. So this gives them a real advantage. And then finally, number 5, the most successful firms are building client service metrics right into partner objectives and their strategic plans. So they are saying to partners that you have an objective of improving your client service score. You have an objective of giving your client 2 unsolicited proposals. You have a client objective of delivering a customized CLE with 2 other partners at 2 of your clients. They're being very specific. The partners are given tools, they're given training, and perhaps equally as important, these firms don't wait until the end of the year to find out if the partners met their objectives. There's a check-in every quarter to make sure that the partners can be successful. Now, if you look at each one of these recommendations, they don't require any changes in technology or infrastructure, or in many cases, even budgets. These are things that we can do if we just reallocate our time and reallocate our priorities. And these are all things, maybe we can't do all 5 of these at once, but certainly we can all find a way to put more focus on our top 5 clients, which is to start and move in the right direction. We can deliver 1 CLE. We can conduct more client feedback, maybe not 242, but maybe 24, but increase the scale. We can figure out who the right partners are to go and triage, and we can figure out the metrics and how to build those into the partner objectives. In some cases, even let the partners choose the objectives that they want. But that way, the partners have more power and more comfort in the things that they're going to do. We're finding that the firms that embrace all these are the ones that are leading in the client service. They're in that 20% that stand out. And we believe that ultimately when the music stops, they, like this young man right here, will win the game of musical chairs. Because the opportunity is out there, the music is playing, the question becomes, what do we need to do to get that high margin business? So I can see questions still coming in, but we want to be respectful of the time commitment that we've made to everybody else. So we'd like to thank everybody for joining us. We will be sending out a copy of the presentation as well as a link to the recording before the end of the day. And we very much appreciate the opportunity to speak with you this afternoon. And if you have any questions that don't fit inside the chat box, please reach out to Jennifer or myself by call or email. We'll be around today and tomorrow, and we look forward to hearing from you. Wish you the best of luck in the marketplace ahead. Thank you.